As you rightly mentioned there on Safaricom, we'll be discussing that, also looking at the extension that we saw Bob Collymore getting with regards to a 2-year extension on his contract, which was previously expected to expire in August. And we'll be talking that shortly with our market watcher. But before then, let's have a look at the foreign exchange market, whereby we saw the Kenyan shilling quoted at 86.90, 87.10 to the dollar on Friday. And that was slightly stronger compared to Thursday's close of 87.10.30. However, the shilling is expected to weaken this week. Crossing over to the Nairobi Securities Exchange, we saw the main share index edging up higher 0.1%, and this was the 9th straight session to about 4,807.53 points, while the all share index on the other hand was up 0.2% to close the week at 123.70 points. With us in studio, we have Ali Kansachu. He is the CEO of Rich Management. Many thanks for joining us.
Thank you, Beatrice.
On the back of Safaricom, we've just had the news that the prospect of very strong dividends. And on Friday, we also saw the CEO contract extended by another 2 years. What do you read into this when you look at it from a strategic point of view?
Well, I think he's proven a very good leader of the organization. I don't know if you remember 3 years ago where the share price was. The performance, the all-in return over his term so far puts him in the top 1 percentile of the world in terms of returns that people have received. I think he's proven a very good captain, there's extremely motivated staff, and he's showing all his competitors a clean pair of heels. As you correctly mentioned, it's throwing off a lot of free cash flow, and if you're looking for solid dividends, Safaricom is surely a place where you're going to get them. So I think it's a deserved extension, and I think it bodes well for Safaricom. The competitors, of course, are facing an entirely different landscape and a very brutal one.
Looking at when he came in, and we also saw a very sharp fall, if you remember, in the half-year profits. I think that at that time they reduced by almost half, and now he's been able to drive the company to profitability, about 25 billion shillings, some very good amount of money. For you looking forward at this company in terms of succession plans, in terms of the strategy, in terms of continuity of plans and policies, what are your thoughts on that?
So just going back to 3 years ago, he was facing an irrational price war where you had Airtel who had entered the market and who essentially, I think, were looking to hobble Safaricom and teach them a lesson, and it didn't work. And that profit drop was a consequence of Safaricom reducing their prices to compete with an irrational Airtel. And then what he did actually was he just put up his prices, and everybody says you can't possibly do that, and he did it very successfully. And voice today, which is what we're talking about, remains a core franchise. It's about 62% of revenues and grew in double digits year on year, so it's hardly dead, is it? Looking forward, I suspect on the succession planning that we're going to look at somebody internal. I think it gives Bob 24 months to find the right individual, and I think it's the right time for the organization as well. But they are very, very dominant at the moment. M-Pesa, M-Shwari, they've got this network advantage of so many customers, and I think you're going to just see them strengthen further, in fact.
And this is the stock that we've actually seen outperforming the main share index. It's up 46%,
Correct.
Whereas on the other hand, the NSE 20 share is just up 16%. What is the future for this stock price? We have it at 730. Do you see an 8?
I see around year-end around between 850 and 9. I think there's lots of momentum in the business. I think you've got a handsome dividend yield, lots of free cash flow. And when I look across the metrics of the business, whether it's voice, whether it's M-Pesa, whether it's data, which by the way, I think will be the the next big thing. And I think that's really on the tipping point as well. I don't see how you can argue with this stock. And interestingly, when the market had this swoon last month where we fell from a record closing high on the 22nd of May, we fell just over 10%. The violence with which Safaricom has come back and regained the 730 level is a clear bull signal for people who are looking at the Nairobi Securities
Very optimistic at 9 shillings?
I don't think it's super optimistic at 9 shillings. I think, if I look at the business, I think, it's got a good earnings trajectory for the next 30 months, and I think that's sufficient for stock investors right now.
Sticking on the track of earnings, we saw Housing Finance last week coming in at 60% pre-tax profit, and on Friday we saw the share price actually closing 3% higher to about 27. For you, what is the status that you can see the banks reporting at? We have KCB and Equity, Kenya's two biggest banks, reporting end of this week. What sentiments are you drawing?
So first of all, I would say that was a strong number out of housing finance. Of course, they got the advantage of a low base effect. They're growing from a smaller base. Someone like KCB and Equity Bank now are big elephants in the room. You can't double your size as easily as you can when you're a smaller player. And I think housing finance have executed well. I think, congratulations to Frank. And I think the share price should be above 30. The forward PE looks extremely attractive to me. The banking sector, I think, we can see that we've got this strong result out of housing finance. I think it will translate across the sector. And bear in mind, the banking stocks have been outperforming in this rally, so people do appreciate that fact. Looking forward, I wouldn't expect to see plus 60% out of equity or KCB, but I'd expect to see something in big double digits, something
What
around
would the
plus 20, plus 22. But, the banks are the best proxy for playing GDP, and EAC and Kenya GDP, in my opinion, are set to accelerate sharply. And therefore, if you're looking for the best proxy to play that GDP acceleration, you've got to look at the banking stocks. And I think that's what essentially people are doing. On PE ratios, KCB is just under 10, Equity Bank is just above 10. These are inexpensive stocks. And I think if people price in this GDP acceleration, you're going to see a good performance out of the banks.
Let's look at the cost of funding for the banks. You have the 91-day at about 6.3%,
Yes.
and you have the interbank levels have been edging a bit higher in the last couple of weeks. But if you look at the cost of funding, it's fairly affordable right now for the banks. How do you see that reflecting on their earnings?
Well, I think what the banks, you would not have expected that the spreads, the NIM spreads, net interest margins would have widened even further, because they're pretty wide coming into this year anyway, and they're some of the widest in the world, and the reasons for that are for a separate discussion. So you wouldn't have bet on that widening, but that's essentially what's happened. The cost of deposit mobilization has gone down, and the banks have been able to hold their margins. But as you can see, if you just drive around Nairobi, all the banks are offering loans, mortgages. They're all aggressively trying to grow the liability side of the balance sheet. And I think what you're going to see is some spread compression second half as people go for volume growth, because the banks have got to step up as well. The economy is not going to grow at the double digits that the president and his deputy speak about, unless we see a much more aggressive banking sector funding that expansion in the
You're talking
economy.
of stepping in at a time where the banks have refused stubbornly to reduce the rates. We're seeing them at double digit. We have the central bank rate at single digits, about 8.5. Why are we seeing this widespread? Deposits as costs have come down.
Yeah.
So there's not much risk.
Your point is absolutely right, and I think that's why the CBR rate is now pushing on a string. I don't think the central bank should be cutting it until they see more reaction from the banks. So we're talking about the spread between the commercial lending rate and the CBR rate. It's probably at the widest we've seen it for a very long time. What can the central bank do about it? I mean, they can cajole, they can persuade, they can keep on going on about it. And they've been doing a very good job of that. The question is, when do the banks buckle down? And I think what happens is you get market momentum. And if I'm looking around, I can see some of the banks have actually stepped ahead of the curve and have reduced their rates. And I think you're going to get a flurry of that happening. But can the central bank come and order banks to set rates at a certain place? Certainly not.
But looking at these liquid stock, will you be watching?
So, I mean, I think we've had a nice rebound in July so far. The all shares up just about 7%. Now NSE 20 just up about 5%. I expect that momentum to carry on. I'm looking for the banking sector to ignite a second wave of a rally in July. And I'm looking at keeping an eye on the banking stocks, keeping an eye on Safaricom. I'm quite keen on Kenya Airways, and I've been nibbling at that below 10. I think that's in a disequilibrium.
Why are you keen on Kenya Airways?
I think all the bad news is baked into the price, right? And I think
they couldn't get any lower.
It can't get any lower. I mean, you can't throw anything more at that price. And I think there's going to be some good news coming out of KQ this year, and I expect the share price to be significantly higher. I think it's essentially in a disequilibrium right now, below 10. And so I'm nibbling at that a little bit. And other than that, sort of watching and seeing how things develop. Obviously, we got big wins in the globe. We got Bernanke out there. He could pop up at any time. I know he's turned into a little pussycat of late, but it's not going to last very long. He's been fired by the president, we all know, and he's got to start tapering before he leaves office. That's the reality of it, in my opinion. So I expect more uncertainty in the global markets. And you saw how that shockwave reaction hit as far as Africa. Nigeria fell sharply.
Liquidity is squeezing the global market.
We got a little bit squeezed, and the shilling weakened, emerging market currencies weakened as well.